The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good day, Money Masters and Treasure Hunters. Welcome to the November 4th, terrific Tuesday edition, hour 2 of the Trader's Edge. I'm your host, Steve Rhodes, and hope that you're off to a great, fabulous, terrific start of your day out there. Let's make sure that you and I, that we do all that we can do to have a terrific Tuesday. You know, we should always remember that what's talked about is a dream. What's envisioned, well, that becomes exciting. What is planned, well, that becomes possible. But here's the deal. What's scheduled becomes reality. And I want to thank you for scheduling some time with me here this morning. I am grateful for your presence, and I'm here to serve. So give me a call at 877-927-6648. Internationally, you can reach out at 727-445-1044. Remember, if you've got a question, then someone else has got that same question. So don't do it for yourself. Don't do it for me. Do it for somebody else. A random act of kindness. What a great way to start your Tuesday. It is Terrific Tuesday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. A flat type market that we've got out here right now. You've got the Dow up 13 points, trading at 17,380. The S&P off about 4, trading at 2,013.96. Composite up off 6 points, traded at 46.32. Russell 2000 down 3 cents. I would say that is flat out here. Gold is back $3. Silver down 27 cents. Light sweet crude is, where is it? It's off $1.94, trading at 76.83. Leading the charge, the upside, you've got Interactive Intelligence up $7. Red Robin Gourmet Burgers up $5.70. LinkedIn up $4.50. Intercontinental Exchange, ICE is the ticker symbol. It's got ice in its veins, up 2%, up $4. Baidu up $4. AmTrust Financial up $3.60. Rocket Ship, Rock, Tennessee, up $2.50, up about 5%. To the downside, Priceline up 97 buckaroonies right now, trading out $1,100. Regeneron Pharmaceuticals off 16, Herbalife down 8, Michael Kors off 7, Pioneer Natural Resources off 6, Retail Me Not down 5, Wynn Resorts off 5. The direction share, the Energy Bull, is down about 6%. That means the XLE, the XLE down $1.78. Again, call number 877-927-6648. Okay, last hour we didn't focus on the indices, the indexes, the ETF structures. So let's go do that now. Let's do that now and take a look and try to get a feel for where we're at. Let's start off by taking a look at the QQQ. Let's start off with that. That's off 18 cents right now. Let's see if there's any kind of a big deal out here. And at this stage, really no big deal. You know, it's got this the danger zone inside the Q's, potential danger zone, is that we're now up here at 3 days. We're up above the B point of an A to B equals CD. The B point, that is from September 19th. Volume there, let me move this up here just a little bit further. Volume up there was 46 million shares. You got above it, wide-ranging bar, accelerating volume, 54 million shares, October 31st. What does that set up? An A to B equals CD. It confirms an A to B equals CD to the upside out here, crossing the B point. 107.52, 112.23. Those would be next on its list out here. Now, what's the danger zone out here? The danger zone is you got 3 of these days out here. No reversal candles, anything along those lines. Now, I did say wide price spread. Make sure, folks, that you fill in the gaps, right? A gap is a beautiful thing out here. Make sure that you fill in the gap out here. Visually, your eyes, don't see it as such. They might see it as somebody might say, hey, that's just a small-bodied candle, maybe a spinning top. The reality is it's a rising window. It's a gap up. And if you go ahead and you take the close from the prior session and you fill that in, you're going to see you got a wide-ranging bar, accelerating volume as you pass that September 19th swing point out there. So over the long haul, where the Qs want to move to is in that price point of 107.52, 112.23 out there. Well, we got to be careful. Could gap down, form a little bit of an island reversal. Does that change my opinion? No, because the underlying, we'd have to go take a look at what's going on inside the futures markets and so on and so forth. But inside the Qs, things look pretty good. Sideways movement, retracement, pullback. That's really what I expect over the course of the coming week out here. That's what's going on inside of that ETF. Let's go take a look at the SPY next, the SPY. The SPY is off 37 cents as we speak right now with 14 million shares. Let's go see what the SPY is doing now. Inside of the SPY out here, the SPYs also have again, this is a daily chart that we're taking a look at. So if you got the September 19th swing point, they are really struggling out here at the September 19th swing point. That's got volume of 120 million shares, 121 to be specific. You came up into it with 146. That's a beautiful thing, but you didn't get above it. You didn't close above it. The price point out there was 200.38. I know I could get it out. 200.38, and the close was, no, I take that back. It did close above it, did it? 201.90. 201.90, September 19th. 201.90, and you closed at 201.66. No, you did not. So you still haven't taken it. You're moving into it with volume, and now we continue that testing process. Again, just continue to move sideways out here, with regard to candle formations. Looks like a doji, smells like a doji. Inside the SPYs, that's really not a doji from yesterday, nor is it from the day before. High wave candle yesterday, yes, but not a real doji out here. The S&P 500, a little bit different story out here. So just some small-bodied candles. I would just really expect the same out here. What are the SPYs eventually going to do? I'm glad you asked me that question. The SPYs here are going to go ahead and make a move. This is the move that's going to take it up through the Santa Claus rally. Your A point's going to be down here at the lows in February. Your B point's going to be up here at the September 18th high. Your C point's going to be that Gartley buy pattern. That's the one that formed on October 15th. The SPYs still want to make a move to 210, maybe the 217.71 level. So they've got a bunch of work to be done to the upside, but not until there's some work that is done consolidating or to the downside out here. That is what's going on inside of the SPYs. Let's go take a look at the Russell 2000, the small caps. Flat today, the IWM trading out of 116.38 or 39 out here. It also had that nice wide price spread, accelerated volume, I believe. Let's see here. That was as it was moving into its swing point. That swing point had 33 million shares. You moved into it with 53 million shares. So you got the wide price spread here. Remember to fill in those gaps, fill them in with color out there. It has not been able to take out its highs, but it has made that 100% move. Yeah, yesterday a little not a wide range of bar, and a high wave candle again just means it's lost its way out here. Really, the message of the markets yesterday between these high wave-ish type candles in the SPY, not the SPY, the S&P 500 index itself, a little doji candle, just means it's tired, and it should be tired. That was a heck of a move off of the lows out here in October 16th. You might think that was a historic type move. You'd be wrong. The move off of the bottom here from October 16th through the highs out here of back on Friday out there, measurement-wise, as far as strengths and move out here going back to 1928, I don't remember off the top of my head. It was a 408th strongest move. That means there are 407 stronger moves out there, and an understanding what those moves meant to the market helps me, and I didn't know that at the time when I was calling for a major market bottom, but it absolutely helps me to still believe that the message of the market, these thrusts that we've seen out here, that the price moving higher is not over. The IWM is going to go ahead and get back in, test its swing point high, its consolidation range. That's going to be up in the 120-ish level, so it'll make its way up there, and if it takes that out, that's probably where we get. That is probably where we get the largest amount of information, because it's going to be the small caps as well as the Qs that are going to be leading things in through the end of the year, maybe further. And at this stage here, I have to say further that the rally, it's not just a rally that goes through December 31st. Hey, it's not a one-way rally out there. You get stoplights, you get yellow lights, you got U-turns, okay? But the bottom is significant bottom formed back here in October. Major significant bottom out there. Let's go take a look at, what do we got? We didn't do the diamonds. Let's go do the DIA. The diamonds here are up just slightly this morning. No, they're down. They're flat. They're flat. 2 pennies. No big deal out here. If we take a look at the diamonds out here, again, wide-ranging bar as it was taking out its September 19th swing point. That had volume of 9.3 million shares. That wide-ranging bar, 7.5 million shares. So, hey, a little light in the loafers out here. Yesterday's volume out here, 5.4 million shares. So just kind of tired, but the diamonds are also going to be moving to higher price. If we take a look at some of the ETF structures, let's go take a look at the one that's getting the biggest kibosh this morning. That is going to be, I think it is, the XLE, the energy sector. Down $2 as we speak, trading out at 84.03. So let's go see what the energy sector is doing out here. The energy sector pulling back with 7.1 million shares. It had a little swing point, a junior swing point from October 27th. That had 23 million shares. So you're kind of pulling back into that with volume, I'd have to say. We've only been trading for 47 minutes out here. So what is it that the energy sector can do? You know, I don't know. Let's go take a look, actually. Let's take a look at ExxonMobil, Chevron, and Schlumberger. XOM is the ticker symbol. Let's get a better feel for what the energy sector might be doing as a result of taking a look at ExxonMobil out here. So ExxonMobil trading out at 94.04. Volume so far, it's a daily chart, 2.6 million shares. Let me look at this. I'm just got to take a quick peek here, pull this back just a little bit further. You know, if ExxonMobil continues to pull back, if it does, it ought to find some support at one of these 3 candle sites out here. October 17th, that's at about the 92.25 area. Maybe it's the 91.27. Maybe even it is the low from October 15th out at 90.61. Those have volume of 18 million. So what do we have? I'm sorry. So we got 23, 24, 25 million shares. Today you're back with 2 million shares. Our trading. So volume is really kind of lightish compared to those volume bars. Not light compared to what it's trading right into right now, October 30th. But let me see. Did this thing even break its trend? Yeah. So ExxonMobil looks like it broke a short-term trend line out here. That trend line, let's go put that in the chart out here. That trend line that I show inside ExxonMobil, there's your trend line that it actually broke, and it broke through that level on October 21st, moved a little bit higher, came back and tested it on October the 27th. Maybe price is going to pull back into that trend line. I don't know. But the ExxonMobil looks to be off of its bottom as well. Let's take a look at, so you got ExxonMobil, CVX. CVX is the ticker symbol Chevron for Chevron. So we take a look at its daily chart. So in its daily chart, it has not broken its trend. Let me get rid of the A to B equals CD down pattern here that it completed to 1 to, looks like 1 to 2. Time just flies. But you know how it would fly even faster, folks? If I heard from you. 877-927-6648. This is Steve Rhodes. This is TFNN. We'll be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Alibaba out with the numbers before the bell, trading out right now at 104.76. So they're having a party over there. Everybody inside of this equity looks to be in a profit position out there. So that is a beautiful thing. Now, I know that if we take a look at the Alibaba IPO out here, this happens to be the S&P 500. It's not that it doesn't happen from time to time, but typically these IPOs, the last big IPO that we had in the marketplace was Facebook. And back then, the thought process was that was going to be a top inside the marketplace. And the answer is that no, it was not. Just like in the case of Alibaba, that too is not going to be the market top. Of course, that's easy for us to say, but when the IPO came out on September 19th, I was saying the same thing. Only reason being was because I went back and took a look at all of the other prior huge IPOs, whether they were U.S. based or not. Just simply, we got to trade this really as a one world market out here. Take a look at General Motors IPO back here in November of 2010. No, that didn't create a market top out here. Nor did the Agricultural Bank of China IPO back in July of 2010. Nor did the Visa IPO even back in 2008. In fact, that gave a little bit of push into a little counter-trend rally inside the market during the decline off the 2007 highs. Blackstone really came the closest out here to selling at the highs. I guess maybe not too unusual there. June 21st, 2007 was its IPO. The Commercial Bank of China, now not anywhere near the top out here. You know, as I pull this back, I've got it throughout the years out here. You got Kraft Foods. AT&T is probably also the second closest. So if we go back and we take a look at major IPOs that came out in their time, this is back in 2000. You had AT&T coming out on March 28, 2000. You know, and that was certainly at a market high, at a market top out there. But for the most part, you go back and you really take a look at all these different major IPOs. You can see I'm back here in the 1996 as an example. I don't know if I went back any further than I probably didn't. So I stopped in 1996. I figured if I took a look at from 1996 to 2014, you know, 18 years worth of majorly hyped big IPOs out there. And there's 16 data points. I don't know how many data points was it. Let's see. You got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. So you got 18 data points with regard to IPOs that are out there. Yeah, that's pretty unusual, very unusual for these IPOs to truly time the top out here. And Alibaba is no different as well. So we kind of push that off to the side for the time being. Let's take a look at what's going on inside the volatility index. Have been trading below its 50-day exponential moving average. That's still the same today. 1592 is the number there. As long as the VIX index trades below that, the markets will move sideways to slightly higher out there. You get above the 50-day exponential moving average, then you start to see, a retracement inside of the markets out here. So I expect we'll see the VIX, the volatility index, remain relatively low here for a while. If we take a look at the summation indices out here for the New York Stock Exchange, we take a look at that. You've got, obviously, net declining issues today. Let's take a look at that, and we'll come back and take a look at the actual summation index out here. So we got declining issues outpacing advancing issues by a small margin. You've got 636 net declining issues as we speak. Now, the next buy point in this market could be with the bears, the sellers, being able to push the summation index down towards its zero line here in its price oscillator. Right now you're 160.253, so you're quite a ways away from that out there. That's probably something that we want to keep our eye on, is the summation index getting down to that, and then it creating a little bit of a trampoline effect out there. But all of the summation indexes are in the green, in the positive mode. Here's the Dow as we speak right now, making these higher highs. That is a beautiful sign. It helps us to understand that the moves higher out here, helps me to understand the moves higher in the market. Well, this, as well as a couple of the other divergence or lack of divergent chart patterns out here, that the markets are moving higher with all of the, not every single issue, but it's just not the weighted issues that are pushing the markets higher. If we take a look at, for example, at the Guggenheim S&P equal weighted ETF out here, we can see that gave us a signal of a bottom out here when it was finding higher lows while the S&P was finding lower lows out there. No real divergence out here. Market is moving higher. Market's moving higher. Not today necessarily, and maybe not for the next week or so, but it will. 877-927-6648. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. I was just trying to put up on if you're watching this on Tiger TV, thanks so much for doing that. Just trying to add to my chart here. The chart that we're looking at. The top portion of the chart happens to be the S&P futures. The center portion is light sweet crude, and the bottom portion is the U.S. dollar index. Now, a lot of folks had made, I'd say a lot of hay being made inside the financial news media here about the markets following the price of light sweet crude. For those of you that are new to seeing this portion of the segment, we know that that's nothing more than BS. Meaning before Steve out here, because if we take a look at light sweet crude, we can see that light sweet crude in essence had been traveling in a consolidation pattern going back to the 2010 time frame. That's then again, you're looking at the center portion of my screen out here. That's been consolidating versus if you go back to the 2010 time frame for the S&P futures as an example, it's been anything but a consolidation out there. So that's a lot of just simple hogwash out there, because you do the work on on it. It just doesn't fly out here. Now, what does fly, though, is the direction of commodities or direction of light sweet crude and the U.S. dollar index. That's the bottom portion of my screen out here. So the blue squiggly line out here is the U.S. dollar index. So why are we paying attention to that? Because we're trying to identify is the U.S. dollar. I've inverted this chart. So when you see the U.S. dollar index moving down, it is getting stronger. Therefore, we can watch the correlation between that and the green line that is on my screen in the center portion out there. So I just want to kind of use that as a baseline out here. And the reason why I decided to go back to take a look at that was because during the break I was looking at a 120-minute chart here and was noticing the euro moving higher and just simply taking a look at the futures contract. Here was the chart that caught my attention, which is the euro here coming in this 120-minute time frame. You are above your market profile resistance level. Of course, this 120-minute time frame here is not over till noon, so we're really only 36 minutes into the bar out here, but nonetheless, it's above its market profile buy. It's in its second wave on the way up out here. Looks like, technically speaking, we got a nice bullish cross over here, 8-day, 13-day exponential moving average. So that's pretty nice. Could be a counter trend rally for all I know. I can't tell you what it is or isn't, but it caught my attention out here, and it caught my attention enough because of the influence that the euro has inside the U.S. dollar index, just simply from a weighting standpoint. Just in my opinion, it's something that we want to keep an eye on. Okay, so it went from the 120-minute chart, then I went all the way back into take a look at what's going on the daily chart. When I take a look at the euro futures out here, and that just puts, if you didn't catch the first hour, we went through this. We took a look at this 1 to 1.272, A to B equals CD to the downside out here. When we're looking at that, we've got this hammer candle that formed yesterday. Today, you've got a nice little bullish engulfing, so you got two bullish reversal signals after an A to B equals CD out here. And then on the intraday time frame, I think now we did this here. We were taking a look at an intraday time frame, looking for an A to B equals CD to finish to the upside. We haven't seen one here for quite some time. That's what also took place. So remember, this was at 9 o'clock. We're trying to make hay of what was going on in the markets out here by just being technical traders, know what we're looking for. Well, guess what? We hit the 1-to-1 A to B equals CD with a wide-ranging bar. That says that you're not going to stop there. So what did price do? Price moved up to the 1 to 1.272 level. Here, let me put some additional decimal points on this chart out here. Makes it a little bit easier as we take a look at Steve-O's A to B equals CD tool out here. So let's go ahead. We'll put like 5 decimal points. That'll work out there. Okay, there we go. So as we take a look at you hit that level, the 1-to-1. We talked about that at 9 o'clock, between 9 and 9:15 this morning, what we were looking for to help us to identify potential change in trend out here. Okay, so we've gotten that signal. Now, of course, price went beyond the 1-to-1, and it did that because you had a wide range of bar, went up to the next level, which is the 1 to 1.272. The number out there, 1.2565, and you actually got up to a high of 1.2565. How the heck does that work? Is that a beautiful thing or what? Is that a beautiful thing or what? Now, okay, so this is what I said at 9 o'clock. In order to see that change in trend coming, we want to see the first A to B equals CD to the upside form. Okay, done, kaput, over. Now, what we want to see is what kind of retracements. Is there going to be a second A to B equals CD pattern that forms out here? The second pattern that would come in, I'll erase the first one. Here's the second pattern. You come down here at the low at about 1 o'clock in the afternoon, 1 to 1:30. That's your A point. Here's your B point. Here's your C point down there. Okay, so you've got your second in essence, right? So you've got 2 and 1 out there. So you had a 1-to-1, you had a 1 to 1.272. And now what we're looking for is the next retracement out here. That retracement, again, we're looking just at intraday time periods. That retracement that we're going to use, we're going to go from our low out here between 5 and 5:30 November 4th all the way to the high out here on the trading session of the one that we're in right now. So now what we're looking for, come on, get rid of that. So now what we're looking for is some kind of retracement to set up the next A to B equals CD. Can the euro itself Now, it can move higher, right? It doesn't have to. There's no reversal signal or anything like this on a 30-minute chart as price got to that 1.2565. So it can go to that next level before it starts to pull back. Right now, I'm just going to go with the information I have at hand. Can this thing pull back to 1.2542? Can it pull back to 1.2527? I don't know. What we're monitoring here, because this could be long-term change in trend inside of the euro. I'm yelling. Am I yelling? I don't think I'm yelling. I'm screaming. I don't think I'm screaming. I'm sharing with you the mere fact that the big money, the so-called smart money, the big money traders are wagering large dinero, mucho dinero. And what we're going to see here, people are going to be like, how the heck could that happen here? We're going to see the U.S. dollar index fall. Not just pull back. We're going to see the U.S. dollar index fall. That means we're going to see the euro move higher. It has to work out that way because of the weighting structure inside of the U.S. dollar index out here. And everybody, including myself, is going to be saying, I can't figure out fundamentally where it's going to come from. I just know by doing the homework that it is going to happen out there. And when it does happen, that's where we got to really be focused on the commodity. So for the next couple of weeks out here, while we've got a market that kind of churns around and moves sideways out here, a real focus needs to be where's the real opportunities out here. And I think those real opportunities are going to come inside of the commodity market out here. But that's just Stevie's thinking. Let's go out to Philadelphia and speak with our man John and see what he's thinking out here. John, thanks for calling. Thanks for holding. How you doing this morning?
Steve, I'm doing very well. Thanks for taking the call. Steve, I appreciate you giving all the background on your outlook for the U.S. stock indices. Wanted to just ask you if you could just share your thoughts on this, on my observation of what's just happened here in the past 2 days on the S&P cash or the December futures on the S&Ps. I will note a couple of features strike me as being potentially significant. One, the Bank of Japan is goosing its financial system, and the E-mini S&P futures rallied to 2016 on Friday, and then held near the highs, closed up near that, but failed to clear over that September 2014 high. Yesterday, we went a little bit higher, 2019, but then closed back under that same 2014 mark. So we've surged. We've run into the prior highs. It's clear, at least on the short term, there's enough selling to overwhelm the buying at these levels.
Yes.
And then I combine that observation with the features that we know exist, namely a Bradley model turn date right before Thanksgiving, coupled with Larry Pesavento's colleague, who shows transit cycle features pointing down hard into November 15th or thereabouts. So with all these features, should we be concerned, or should we be speculating here on a tradable high in the S&P, the cash and the futures?
Well, and that's a great question. And so, if we take a look at a number of those elements, I'll kind of go from reverse. I'll start with your last question. Is this a tradable high? It all depends on, obviously, your time frame horizon. I believe the answer to that question for someone like yourself, who uses profit targets and uses stops, the answer is yes, and because you trade the futures. Now, the reason why I would say that, and specifically you're talking about the S&P, or in this case here, the ES Mini, what we know, or what I know about the ES Mini, is that you've got this great pivot point, 2011.75, and price has just kind of been hovering around that area. Price should break decidedly one way or the other, above that or below that. Now, let's talk about above that. Well, above that, coming off of the lows here, and this is the 5-hour energy chart brought to us by our man Saratoga Bob in the Tiger's Den. If we come all the way back to the low from October the 15th, we have made 2 7-wave moves to the upside. So meaning we have seen the first peak G that took place, a little doji candle back here at about 4 a.m. That was on the trading session of October 22nd. And, when you take a look at the trading program that you and he, in essence, designed out there, once you broke above those highs, that said, hey, prices had recycled. They were moving higher out there. Plus, you were above market profile resistance levels. You'd had everything you needed for price to move above that, continue moving higher. Now, the patterns that we had inside of the TAS market profile at the same time that was taking place, we had the point of control. We had that blue line very close to the resistance line. Just like you had pointed out, sellers basically are in control of the ball as we speak right now. That's what took place back then. And once price broke above that with conviction, that told you that it didn't matter that sellers had control. Actually, the key word was had, and they no longer did have control. And price moved up. And now we've got that second, almost exact same pattern. Now, look, you made this seventh wave to the upside. You didn't make a doji. Doesn't matter. You made a bearish engulfing candle on that very next trading session. That took place at 5:15 yesterday. So you make a slightly higher high coming in to the 2 p.m. Again, it's a 5-hour chart out here. That was out at the 2019-25. Nice little bullish engulfing candle. We happen to have this little price relative strength divergent pattern. We've got the TAS market profile. Same kind of pattern here as I pull this out on a 5-hour chart where you've got the point of control closer to the resistance zone. Says that sellers should have control. So the answer is, could you trade this to the downside? You could. I would say you ought to find support at 1976. You're at 2002 right now. It seems to me like that would be the first level of a target where you would, as long as price stays below that 2011 75 out there. So that would be my short-term answer. I don't know if that was my short-term or my shorter answer to your last question out there. And I think everything is lined up for that to take place. You get above 2017 with any kind of conviction, whether it's volume, stay above it, come back and test that area. Then I think you're off to a new recycle. And that new recycle says, hey, even though my historical analysis of what happens day by day over the last 44 years, that historical analysis we can go ahead and throw in the trash. The market's decided to go ahead and move higher to its next levels out there. But not until we get above 2017 is the number that I'll use out there. You brought up the QE in Japan that took place on early Friday morning. And one of the other things that I know you didn't share with the audience, but you probably intended to, was the even bigger news from the Japanese Government Pension Investment Fund. I think that's what they call it, Japan's Government Pension Investment Fund, if I'm not mistaken. And that was the bigger news, as you know. And that's where, forget about the QE. That's one thing, but you now have a retirement fund that's trying to make up for lost time out there, and they've decisively decided that they are going to invest what amounts to $118 billion in fresh money into foreign stocks, and that doesn't mean it all comes to the U.S., but when you take a look around the world, the U.S. is a pretty good place to be investing. Now, that's just the fresh money. That's a real allocation as they sell bonds back to the Japanese government, then they go ahead and put this money to work. That also means that because their allocation percentage, as new money comes in each day, they're going to be investing that in U.S. stocks out there. So I think that bodes well for the longer term. Now, my question to you, did I answer your questions, or did I give you some things to think about?
Steve, you always give me things to think about, so that just goes without saying. Thanks so much for your help. I appreciate it.
Okay, you betcha. That's our man, John in Philly, and thanks for the call there, John. This is Steve Rhodes. This is TFNN. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's off 43, S&P down 11. Let's go out to Pennington, Massachusetts, to our man Mike. Mike, thanks for calling. Thanks for holding. How you doing this morning?
Good. I'm pretty good. How are you? I'm in New Jersey.
Oh, you are? Hey, sorry about that. That's what popped up on my screen, and you're right. Hey, you want to take a look at UNG? Tell me what you're doing, how I can help you.
Well, I got in on Friday, and it looks like a 3-gap play, so I'm wondering if I should get out.
Well, the UNG, here's what the UNG has done. If I take a look at a descending price channel coming back off of about the June 13, 2014 highs, and yesterday you actually just kind of cracked above it, and today you're a bit higher. So you're in a good trade. So congratulations for buying this before that cold weather actually hit. So you're in a nice trade out there. If I take a look at what's going on inside the current contract, which the UNG is based on, so the December contract, I believe, for natural gas, what it has done here is it has made the 0.786 retracement level 4.112. So we should begin, there's some pretty good volume in that contract today. We should begin to see a retracement. Now, I don't know if it could take out this 0.786 level and make a run all the way up for its swing point out here from October the 1st, September 30th out there. Are you looking at this as a longer term, intermediate term, short term trade? That would be more.
I got Boyle in one account, and then I got options expire Friday in another account.
Okay. So, you're, with regard to the options that expire on Friday, you're up at the 0.786 level here. I'd probably consider taking some of your profits for sure.
Yeah.
Because this could be this could be a natural area of resistance. Don't know if it will, but it could be. But it looks like, personally, I'm waiting for the UNG or I'm looking for natural gas to make one little pullback and then go ahead and fire away to the long side. So that's my thoughts.
Okay. Great. We're on the same page.
Absolutely. I think natural gas has a real long way to run to the upside. Those commercial traders, of all the trades out there, they are net long in a big way. They haven't been this net long since 2011, and we're coming right into the seasonal cycle out here.
Right.
So we should see natural gas, move higher for quite some time to come.
Okay.
All righty.
Very good. Thank you.
That's Mike. Let's go out to Sarasota to John. John, thanks for calling. Thanks for holding. How are you doing this morning?
Very good. Thank you, Steve. How about you?
Excellent. Always nice to hear your voice out there. We've got about a minute left. Otherwise, I'd spend time hanging out with you. But you wanted to take a look at Facebook. So tell me what you're doing and how I can help you there.
Well, I have a put on it, and I want to know if you have any idea where it's going.
Well, what I would say about Facebook is the most you're going to get out of this likely is the top of the July 23rd candle, and that is at 71.33 or at 74.46. The reason that I say that is because you've got a huge sign of strength that had volume of 124 million shares. Now, that pullback that took place, that little gap down, only had 106 million shares on October 29th. So it disappointed out there, but it still has more volume to the upside than it does to the downside. Maybe this is more like a consolidation. But I would say 71.33 is really good support for Facebook out here. That would be a spot where I would be depending on what the market is doing. Let's say that Facebook pulls back to that level with by next Friday, I would be looking to maybe consider taking a long position in Facebook versus trying to take it to the short side.
Okay. Fair enough.
Does that help?
Now, yes, it does. And now, IBM, you said something earlier, and I missed what you said.
IWM or IBM?
I'm sorry, IWM.
IWM is going to get up to its consolidation highs out here. IWM is going to get back up into that 120 level. That's where we probably really get a feel for the market, because if the Russell 2000 cracks the consolidation, it keeps on moving, the market will move higher big time for quite some time to come. Sorry that we're out of time. Hey, folks, stay tuned. Basil Chapman is up next. Have a great Tuesday. Look forward to seeing you tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.